Welcome to Confident Real Estate. I'm your host, JC. I'm going to dive right into it today. A couple of weeks ago, I put out a short video about the master lease strategy. I don't think I even called it that in the short video, but that's what it was. It's where instead of buying a property and leasing it up after doing the capital improvements and renovations, you just lease a property from somebody and then you sublease the individual units to people who want to live there or work there based on whether or not it's a multifamily property or some kind of commercial property, right? It's a great way to get started in real estate investing without spending money on closing costs and mortgages and purchasing a property and everything that goes with that: title insurance, surveys, appraisals, inspections, etc., attorney's fees. It adds up. So instead of spending that huge upfront cost, which is what causes a lot of people to hesitate getting involved in real estate investing because they either don't have the money or it takes a while to put that money together and then they get cold feet about what's the right investment. The best way to go about it is perhaps to lease a property and then sublease the property's individual units to other people. And why would a landlord want to do that? Why would someone who owns a property want to lease you the whole thing instead of actually leasing the individual units to other people? Well, maybe they don't live in that state. Maybe they don't want to deal with property management. Maybe they've been trying to sell the property and they just cannot sell it, even in this hot market. That actually does happen because they might not be priced well. They might not have, taken good photos to market the property. Maybe they're trying to sell it themselves and they're shooting the photos on their phone with no lighting. They just don't know what they're doing. So you can come in, rent the whole property from them, and then sublease the individual units and you make cash flow. The benefits are, besides not having to come out of pocket up front with major money, are that you don't have to put aside reserves for capital improvements. So if something breaks, well, it's on the landlord to fix it. And that's not you. You're the tenant who is leasing to your subtenants. The landlord has to fix the things that break, and you negotiate that in your lease with them. And it's a fairly standard provision in most leases. Real estate taxes, you're not paying that either. The landlord's paying it, partially from the rent you pay the landlord. Insurance for the property? Nope, it's still on the landlord. You're going to have potentially your own renter's insurance, but really you're going to have each individual tenant that subleases from you get their own renter's insurance, and they're going to name you as an additional insured party. So as long as you are able to lease the property with the right to sublease it, and you have a solid lease with the landlord, which is really pretty simple, you can go out and start making money really quickly without putting a lot of money up front, not facing those upfront costs that people who own property would face. It is a great way to get experience and to start real estate investing and at least get cash flow. You're not going to get capital appreciation because you don't own the property, but you'll get cash flow. And maybe you're doing some painting and coming out of pocket for some things that'll freshen up the property and raise the rents that you're going to collect. That's up to you, but you're going to get cash flow, and you're not going to put a lot of money up front, and you're going to be able to accumulate the money you get from that cash flow, potentially to go out and buy a property now that you've got confidence in how to rent a property and manage it. So it is very valuable information that we're going to cover in this video, because I'm going to show you how to go online to just one of the major leasing and sales websites that's out there and find an ideal property and how to figure out the ballpark of what rents might be. You're going to love this. So click the like button right now. If for some reason you're not a member, click subscribe and join our Confident Real Estate family. Both of those buttons are free. And let's get into this. So a great place to find a property where you can rent the entire property and then sublease it rather than purchase a property and really save yourself some money as you get your feet into the real estate investing game is any website like Zillow or Redfin or Trulia. They're all pretty much owned by the same company anyway. But let's start with Zillow. And just for the sake of it, we're going to put in Trenton, New Jersey, which is capital in New Jersey, and a great place to find some real estate investments because it's the capital. There's a lot of people that have jobs there, work for the government, there's schools near there. So let's just use that as our example for today. Instead of for rent, we're going to look for sale. We're going to click on any kind of bedrooms. We want multifamily, nothing else, because we want to rent multiple units. Now, if we were to do regular homes, you could see some deals, $29,000 in foreclosure. This house, $245,000. That still may be expensive for a lot of people, but there are definitely deals to be had. Here we're under $200,000, but it's looks like a single family home. It's 1,596 square feet. It looks like it's an older home. It's got some great renovations inside, but how much are you really going to be able to rent that for? It's 4-bed, 2-bath. It's all done for you already. You're going to end up having to rent it for a significant cost in order to pay your principal and interest, what Zillow averages that might be for you, and the property taxes of $401 a month. And I can tell you the home insurance, if you're an investor, is going to be more than $70 a month. So you're really going to be cutting it close as to what you make on this property in cash flow. And at the end of the day, you're going to have to put up a significant amount of money. Just to qualify for the mortgage, you put 20% down, and usually for investors, it's 25%. So let's change that. You're looking at $49,975 up front. And look at the interest rate they're giving you. In an investment loan, you're probably going to be closer to 3.5%. So at 3.5%, you're now looking at something more in the range of $673 a month. It gets expensive. So $1,145 conservatively off the bat. Maybe you're going to get $2,000 a month for this. You'd have to do some research on what the rents would be for a 4-bed, 2-bath and newly done like this. But even if you got $2,300 a month, great. You're walking away with some good cash flow, but you just got to figure out whether or not you have $49,975 to put up front, plus closing costs, attorney's fees, a whole variety of other things that you may not expect that come with the property when you do your inspections that you have to pay for and get your appraisals done and your survey done and your title insurance done. So it's going to cost you $60-something thousand to get into this $200,000 property. Could easily cost you that $60,000 plus. So something to keep in mind. So what's another alternative if you're not going to go this route? Well, you can go back and we could say we are looking for multifamily homes. We want to rent multiple units, but what we do is here you see it sorts by the newest. Let's go down to the bottom and let's look at things that have been on the market 110 days, 117 days. Here you've got a $750,000 multifamily home, $750,000. If $200,000 is a little bit tight for you, $750,000 is certainly going to be tight for you. But let's take a look at this home. It's beautiful. It's got 3 units, it says, 3-family brick home, 2-car garage, separated utilities, it says. So these could all be great things for you. Let's see what else there is. Some of these are older homes. Here's one. Just went through a price cut on July 5th of $20,000. And it's asking for $330,000. Let's take a quick look at it. It's a multifamily. It's an older home. It's 2 apartments. One's a 1-bedroom, one's a studio with an office. There's 2-car garage, paved line and lit off-street private parking lot in a convenient location within walking distance to a rail station for easy transportation. It says each of the 3 units. Here it says great investment property with 2 apartments, 1 bedroom, 1 studio. Here says each of the 3 units have separate utilities and meters. First floor office and half bath, first floor studio apartment with half bath, and second floor 1-bedroom apartment with kitchen, living room, full bath. You got to do your research and really take a look at it. But if we take a quick look at the pictures they post, it looks like it's in fairly good condition for an older home. Doesn't look terrible. For this area, this is a fairly decent looking home. So it's asking $330,000. So if $200,000 was already going to be a lot of upfront money that you might not have, $330,000 is definitely out of the question. But let's go look at, now we're going to switch over to rentals in Trenton. Some of these 1-bedroom, 2-bedroom apartments here's an older home that's renting a 1-bed, 1-bath apartment, 1,328 square feet. Looks in similar shape to the apartment we just looked at, maybe slightly cleaner, slightly newer, but very dated. I mean, you could see right here, the bathroom is extremely dated. So they're asking $1,750. It has 2-car garage, adjacent to the unit, a non-live-in basement as well. So it has some more room. They're asking $1,750. If you look at some of the other listings here, they're averaging, let's see, let's look at 1 bed, 1 bath. These are nice apartment complexes. Some of these older homes that we get down here to are asking $1,100. You got $1,080. This one's asking $912, but doesn't look like it has parking. It looks like it's a off the street parking. There's no garage there. So you got to take a look. But here, you figure they're in the $1,000 to $1,200 range. Again, you're going to do your due diligence. You're really going to take a look. But let's do the math. If there's 2 1-bedroom apartments and you can get, let's say, $1,100 for each of them, right? And then maybe for the studio, you're getting $800, $850, we'll say. Just rough numbers. Again, you're going to do your due diligence and really take a look at what you're really going to get. But that's $3,050 a month in cash flow. Now, let's say you go to that property owner and say, I can pay you $2,000 a month to lease the entire property from you. And that's, again, they're asking $330,000. You're offering them $2,000 a month. That's $24,000 a year for a property they have not been able to sell for over 141 days on the market. You see that right here. 141 days, right at the top of the overview. So $24,000 is not terrible for them if they feel like maybe this is not the time to sell it because it's just not selling. Now you're going to walk away after paying them $2,000 a month and let's say pulling in $3,050 a month in rent for the 3 units. That's $1,050. You don't have to put aside reserves for capital improvements or reserves for turnover. It's $1,050 in straight cash flow to you. You're not paying any mortgages with that money. You're not paying real estate taxes. You're not paying any form of homeowner's insurance. In fact, you're going to make your renters get renter's insurance to cover you in the event that they have some incident in their unit. So you're really looking at over $1,000 a monthly cash flow. And what is it going to cost you? $2,000 up front to rent the unit, and maybe a second $2,000 to rent the whole in security deposit to rent the whole property. So you're at $4,000 upfront cost. That is a lot different than close to $60,000 on a property that was a single family and around $200,000. This is how you can get your toes into real estate investing and start making money pretty quickly. Again, everything we just covered in this video is a synopsis. You really got to do your homework on the market to really understand what the price points are for renters, what the difference is in what you're getting for a 1-bedroom with parking versus a 1-bedroom without parking versus a 1-bedroom that has its own private garage, right? Those are the kinds of things you need to become familiar with in the area that you're going to lease a property and then sublease the individual units. That's something that you actually can go do by checking out Zillow or any of those Trulia, all those other websites that are all pretty much owned by the same company, or by going to open houses or going on Craigslist and calling up landlords and going to look at the properties they have. It's going to take you a little bit of legwork to figure out the numbers at work, and then it's going to take you a little bit more legwork to find the right property. But it's going to take you the same amount of legwork to go buy a property. The only thing you're not going to have to deal with here is huge amounts of money that you got to come out of pocket for. So if you don't qualify for a loan, a mortgage loan, or you just don't have enough money to go buy a property, this is a tremendous way for you to get started in real estate investing, create passive income, and start living that financially independent life with some financial freedom that you start to grow for yourself today. As always, I appreciate you watching this video to the end. Smash that like button if you haven't already. Hit subscribe if you're not yet a member. And I better see you around here for the next video. Until next time.